going to be doing problem 1-5B, statement of cost of goods manufactured and income statement for a manufacturing company. So we're working with the Shanika company for 2016. And it gives us some information here about our inventories, both January 1st and December 31st. Whoops, I wrote in my book. And then if we look, if you're using a textbook, if you look at the top of the next page, it gives us more information. Again, January 1st, there's no numbers here, but we do have some for December 31st. Our instructions are to prepare a statement of cost of goods manufactured and to prepare an income statement. Okay, so if we have our working papers with us, I'm just going to come up here and circle 1-5B so I know which one I'm doing. At the top of our working papers, I'm going to fill in my company name, okay, which is Shanika Company. And then the third line is going to say for the year ended. December 31st, 2016. And of course, center those as best as you can. Sometimes I'm not very good at centering. Now, when we create this statement of cost of goods manufactured, we're going to start with our work in process inventory as of January. Okay, we want to know how much money we have in the products that are in the process of being made when the year started. Okay, so if we look in our textbook, it tells us inventories and it tells us work in process. January 1st was 109,200. Okay, so I'm going to take that number, and that's going to be a number that we use with a final calculation. So that's going to come over here, 109,200. We're going to put that number all the way over to the right. The next thing we want to know is how much we spent on direct materials. Okay, so that's going to be our next heading. Direct materials, and we're going to put a colon here because we have some things we need to list and some things that we need to add and subtract. So we're going to start with our materials inventory on January 1st. So for example, if we were following the guitar example from the book, this would be how much wood we have. Okay, materials inventory for January 1st. If we look at our textbook, now one thing I'm going to do is if you have this problem on paper, feel free to do this. And if you have a book, you can write and do this, or you can do it in pencil and erase it. I'm going to put a check mark next to the numbers as I use them, just so that I know that I've already taken care of that one. So materials inventory as of January 1st was $77,350. I'm going to check it to say, yep, I've used it. And then over here, I'm going to have $77,350. Okay, move this closer to my book. So the next thing we're going to have is purchases. How much material did I purchase throughout the year? Okay. If we look in our information, it tells us materials purchased $123,500. So again, I'm just going to check mark that to say, yep, I took care of that one. Okay. Now I'm going to add these two numbers together. So I'm going to put a line under this. And once I add them, it's going to give me the cost of materials available for use. Now what that means is this is how much wood we had at the beginning of the year. We purchased $123,500 worth of it, and this is how much I have altogether available for use for the year, was $200,850. Okay. Now the next thing we're going to list is our materials inventory again, but this is going to be our materials inventory at the end of the year. So how much did we have when the year ended? So December 31st. And if we look in our textbook, it tells us materials on December 31st was $95,550. Okay, so this tells me January 1st, purchased throughout the year for a total of $200,850. I'm going to subtract what I have left. Okay, so I have this much in the garage. I added this much. I'm going to subtract what's left out there so that I can see how much I used throughout the year. Okay, this is going to tell me what my cost of direct materials that I used throughout the year. So cost of direct materials used. And again, I'm going to subtract these two numbers, and I'm going to put the total over here in the middle because that's where we need it for our next math problem. And that's 105,300. Please feel free to use a calculator as you go. I did this problem before I made the video, so that's why I'm not stopping to do the actual math. So I have my direct materials. The next one is going to be direct labor. Okay. If we look at our textbook, it tells us that our direct labor was 186,550. So I'm going to stick that number over here in the middle. So I got my materials, I have my labor, now I need my overhead. Again, factory overhead, I'm going to put a colon here because we're going to have to make a list. We learned when we did problem 1-2 that there's a lot of different things that could be considered materials. And there's a lot of different things that could be considered overhead. Okay? Labor, there aren't quite as many of those. So our book put them all together in one pile. Now, as we're looking through our data for this company, we want to look for numbers that have the word factory with them. Okay, because those are the ones we're going to be using. The first one we're going to list, however, before we go through and look for the factory, is indirect labor. Okay, that's the first one we're going to list. So indirect labor is $23,660. So we're going to indent this. Indirect labor. And again, we're going to start in this first column because we're going to have some things we need to add to it. And we said that was 23,660. So now we're going to go through our list and we're going to find the things that have to do with our factory. The first one we come across is depreciation expense, factory equipment. Okay, and that one was 14,560. As we look through our book here, the next one that we come to that we haven't used yet is heat, light, and power for the factory. So 5850. And that's all of them on that page. If you're using your textbook, we're going to have to flip back up here to the top of this page. The next one that we come across that talks about the factory is our property taxes for $4,095. The next one is our rent expense for $6,825. Okay, and then supplies for $3,250. Nope, I forgot the word factory after rent. There we go. And then the last one is miscellaneous costs for the factory, $4,420. Okay, so we have all of these. So now we're going to indent again, and we're going to write total factory overhead. We're going to add all these numbers up, so I'm going to put a line underneath it. And when I add all of them up, and again, I did this math already, it's $62,660. Okay. So now I have my direct materials, my direct labor, and my factory overhead. We're going to add those three numbers together, and when I do that, it's going to give me my total manufacturing costs in 2016. So that's what my title over here is going to be. Incurred. Oops, you can't see what I'm writing here. In 2016. I'm going to add those numbers up, and I'm going to put the number all the way over here on the right, and the number is 354,510. Okay. Since I added them, I'm going to put a line there. I should have done that before the total. I missed that one. So at the very beginning of our statement, we found that our work in process inventory on January 1st was 109,200. We now know that we have incurred $354,510 in manufacturing costs. So we're going to take these two numbers and we're going to add them together. And when we do that, we get 463,710. And this 463 tells us what our total manufacturing costs were altogether. Okay? Not just the ones that we incurred in 2016, but also the ones that were in process, that were in the middle of being made when 2016 began. Okay. Now we're going to take this number. We have some products that we have started, but we have not finished. And it's now December 31st, and there's things that we've started that aren't finished. We have to take those into account too. So we're going to subtract, our work in process for December 31st. Okay, so we're going to look at our textbook, and it's going to tell us that our work in process on December was 96,200. Okay, because these products aren't going to be finished until the following year. Therefore, we need to subtract their materials costs from, we need to subtract their costs from the cost we've incurred so far, because these are going to be costed to the next year because they're not done yet. We can't sell them yet. So we're going to subtract these two numbers and we get 367,510. And that tells us our cost of goods manufactured. So that's going to be our heading over here. So that tells us how much we've spent between the things that were started when the year started and we finished this year, all of our direct materials, all of our direct labor, all of our overhead, minus the products that aren't quite done yet, gives us a total of 367,510. Okay, so this report is finished. Now we're going to do our income statement. So our income statement, again, I'm going to circle this so I know that this is problem B. Our income statement starts the same way. Shanika Company. For the year ended. December 31st. This one's 2016. Okay. Now our income statement is going to start with our sales. So if we look in our textbook, it tells us that our sales were $864,500. Okay. That number is going to come all the way over here to the side. Okay. The next thing we're going to list is our cost of goods sold. We're going to put a colon after this one because we have to list some things underneath it. Okay, first is our finished goods inventory. As of January 1st, 2016. Now, we remember from our PowerPoint that our finished goods, there's any product that was completed. It was completely created, it was completely done, but not sold yet. Okay? So if we look in our textbook, our finished goods inventory as of January was $113,750. So that number is going to go in the middle. Okay. We also need to know what our cost of goods manufactured was, which is what we just figured out. So we're going to go back to our cost of goods manufactured statement that we just created and grab that bottom number, that 367,510, and bring it to our income statement. Okay. We're going to take these numbers and we're going to add them together. Pardon my arm there. When we add them together, we get 481,260. Okay. So finished goods inventory January 1st, we had $113,750 worth of product that was done and ready to sell. We learned by creating our statement of cost of goods manufactured that we incurred a cost of $367,510 during the year 2016. So this $481,260 gives us our total cost of finished goods that are available for sale. So cost of finished goods available for sale. Okay. Next, we're going to subtract our finished goods inventory from the end of the year. So our finished goods inventory from December 31st, 2016. And we'll go to our textbook. And our textbook tells us that our finished goods as of December 31st were 100,100. So again, we're going to subtract that number because that's how much we have sitting in our warehouse ready to be sold. Put a line here. Once we subtract that number, we're going to put it over here, and that number is 381,160. And that number tells us our final cost of goods sold. Okay, so again, our final cost of goods sold was 381,160. We're going to take our sales minus our cost of goods sold, and we get 483,340, and this tells us our gross profit. So if we had no other expenses other than our cost of goods sold, what it costs to manufacture our product, then this would be our profit. However, we do have other expenses. We have some operating expenses we need to take care of. We learned from 1-2B that operating expenses are divided into two different sections. They're divided into administrative and selling. So we're going to start with administrative. We start with administrative because they're in alphabetical order. We do have a bunch of administrative expenses to list, so we're going to put another colon there. And now we're going to look at the list in our book and find the ones that we have not checkmarked yet, that we haven't used yet. Advertising we know is sales, so we're not going to touch that one. Depreciation expense office equipment, that would be administrative, so 22,750. Now for these, we're going to start in the first column. So we said 22,750. Okay. We're going to go back to our textbook. And we finished all of those on that page except for that one selling expense. So we're going to go back up here to the top. And we have office salaries expense for 77,350. So that one's going to go under administrative. And again, 77,350. And then as we go down, we have property taxes for our headquarters building of 13,650. Again, that one was 13,650. And then if we keep going down, it looks like we have sales salaries expense. So that's sales. We're going to leave that one alone. And that's all of them. So we're going to go ahead and add these up. And when we do, we're going to put the number over here in the middle, and we get 113,750. And this gives us our total administrative expenses. So our next set of expenses are our selling expenses. And again, we have a couple to list, so we're going to put a colon here. Looking back in our textbook, we've got check marks by almost everything. Here's one. Advertising expense is the only one on this page for 68,250. So you can see how the check marks help us see what we haven't used yet, so we don't miss anything. And again, we're going to start in the first column. So as we scroll down and find our check marks, right here we have one sales salary expense for $136,500, and then that'll be the last one. The last one we pull from our book. Sales salaries expense for $136,500. Since that's all of the selling expenses, we're going to add these together and put the number in the middle, and we get $204,750. And that is our total selling expenses. Okay, so this whole section has been our operating expenses. So now we're going to list our total operating expenses. We're going to take these two numbers and add them together. And our total is $318,500. So we have our gross profit up here of $483,340 and our total operating expenses of $318,500, and we're going to subtract these and we get $164,840, and this gives us our net income. Okay, remember our net income is our revenue minus our expenses. So we started with our sales. We subtracted our cost of goods sold, which gave us our gross profit, then subtracted our operating expenses, which gave us our net income of $164,840. Now, normally when we're doing statements of any kind, we would double check them and then double underline them. Since we're not taking this all the way out to the balance sheet to see if it balances, we're not going to double underline this one. But just so you know, if you were doing this for a business, you would take it all the way out to make sure it balances and then double underline them. Okay, now that we've done this, you can go ahead and jump into your assignment problems and upload them to the portal when you're finished. Have a great week.